What's going on, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex, and today we're going to be going over AMC stock, one of the most talked about stocks that hasn't really moved much in the past month. As we can see, it's been pretty flat, only a 1.7% change in the past month. And as we can see, it's been relatively flat, holding this this low $50, high $40 price point pretty steadily. As we can see, it's been pretty rough, hitting lows of under $40. But the good news is today it was down almost 13%, $39 per share in early morning. But the good news is the retail investors saw this as a great buying opportunity. They saw it as a stock that's on discount. So they ended up buying up the stock, driving the price up to low 40s until mid the afternoon, late trading hours. Then we saw it rise to almost $50 per share, which gives us the indication that retail investors are not backing down. They're holding their shares, and when they see dips like this, they end up buying it back, which is pretty good because the shorts have not yet covered and short interest still is on the rise, which means that if AMC is going to be holding this price point, the shorts are going to be very scared because then they're going to be buying back their short positions at like a 400-500% loss, which is pretty bad for them. So the shorts are still holding onto their positions, hoping AMC stock goes down, but that's not going to be the case because the retail investors, the ape community, continue to buy up these dips. As we can see, AMC tried to dip late in trading hours, dropping all the way to $45 per share, but then it got bought back right back up all the way to $49 as we're sitting at currently. So this is very good news, and if you're holding AMC, it is going to be a bumpy ride, but but overall in the past month it really hasn't moved. It's just a bunch of ups and downs, but overall it doesn't move. We're still in the consolidation period, and we're still going to be holding our shares and buying up these dips. Now, if you're holding AMC shares or you want to get into it, AMC has been pretty flat, so we're just waiting for that next huge breakout. So what you could do is, if you're holding at least 100 shares, you could sell covered calls, which is what I'm doing week over week to try and get some of my premium back. As we can see, my cost basis is just under $60, down around $2,000, but I've made most of my money back through selling covered calls as well as cash secured puts, because every week I'm collecting the premium from these contracts. So right now, if you want to sell some covered calls, you can. So it's head over to the options chain, and I highly recommend choosing something like a probably you want to do a week or two out, because we don't know exactly what's going to be happening with AMC. So let's head over to the options chain for this stock if it would load, and then we can see what's going to be happening. So AMC, July 9th expiration, which is tomorrow. We're going to be doing either July 16th or July 23rd. You're going to be collecting more premium the longer the expiration date. So we're going to be selling calls, and you can do something like a $60 call, and you can receive $159 of premium. Guys, that's a lot of premium for such a far strike price. That's $11 from this current stock price. So if AMC stays under $60 by next week, you're going to be collecting your full profit of $159. And of course, if you have different risk tolerance, if you want to get rid of your shares for whatever reason, you can go a safer, a further strike price down, like a $55 call, and you receive $232 of premium. Or of course, you can extend the expiration date if you want to collect even more premium. As we can see, a $60 call for July 23rd gives you $308 of premium, which is pretty good. Premiums on AMC are skyrocketing because of this huge green day we saw in the market today. People are pretty bullish again on AMC after a rough week last week from a pretty red week. But today in the market, we're up around 9%. So it's looking pretty good for us. I'm holding my shares. I'm continuously selling covered calls, and I am also going to be selling cash secured puts in order to buy up any potential dips. So if you're not yet in AMC and you want to sell some cash secured puts, you are going to need around $4,000 of collateral. But the good news is you can collect premium week over week, and if you get assigned, you will be buying the dip on the AMC. So something like a $45 strike price expiring next week would give you $313 of premium, and that's a pretty good price point. Like if you want to buy the dip on AMC, $45 per share is a very good dip to buy, and you get paid to do so, a nice chunk of premium, which is $313 of premium. Now, I did a poll and it showed that a lot of you guys have small accounts. The strategy isn't for everyone because you do need $4,500 of collateral, the strike price times 100, in order to sell a put option, because if AMC goes below $45, you have to purchase 100 shares at $45 each, but you always receive the minimum credit of $313 no matter what, unless you buy it back to close the position. So yeah, if you do this, your cost basis is going to be around $41.87, because our cost basis is going to be $45 per share, subtracting it from the premium of $3.13 per share. So we're effectively lowering our cost basis to something pretty favorable. So this is a great way to get into AMC if you want to collect premium week over week and don't mind buying the dip on AMC. So that's about it for this video. If it helped you in any way, please leave a like, comment down below what your thoughts are on AMC, what your positions are, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.